Hi there, traders. This is Brad Gilbert with the Daily Market Insight for Thursday, the 18th of November. All right, now the equity markets, US equity markets, pretty much starting to stall. US bonds also sort of just coming back a touch. We're coming back to a market where all the US sort of fundamentals are factored in, right? Those higher US CPI numbers really pushing the Fed towards a hike in sort of mid-2022. Right, a little bit sooner than possible. That's given the dollar clear direction. But now that the equity markets have sort of found a home, and so has the bond market, we could start to be getting closer to that medium-term sort of top in the dollar. Right, it's sort of stalling again. This is where we were prior to the CPI numbers. Now we've had a huge flurry of buying and everything sort of getting refactored in and recalculated. It almost looks like we're sort of getting back to that point where the dollar may be sort of topping out, but we'll have to see how it goes from here. Now, just coming back to what we saw yesterday, UK CPI numbers, right? Better than expected. I was talking about this yesterday. We had UK CPI that followed up with Canadian inflation. If anything, a potential opportunity for a sterling CAD trade, right? The real outcome of that would happen with the release of the Canadian data, because you need the first leg first. So as it was, UK CPI beat all expectations. Canadian inflation numbers were right on expectations, which is a bit of a neutral outcome, right? So with that, if I just come over to the charts here, we did see a decent move here in sterling CAD. I'll just get off the majors. And you can start to see how this works. Now, you get the price action here around the release. Right, we get the UK numbers, bit of a spike up, comes back down, and then you get the Canadian numbers and sterling CAD. Well, it's up 150, 160 points. The devil's in the detail, right? Understanding how things connect is the key to that. Now, just coming back to the major currency pairs, right? As I said, like euro, we've got a nice sort of downtrend. We've seen this a lot. We've got a nice target here at around 113.50. Whether that continues lower or breaks that level. Sterling, as I said, had good inflation numbers, puts pressure on the Bank of England, and this is what we want to see. It gives that sterling an upward bias, because the expectations would be that the Bank of England will have to raise rates at the earliest meeting, right? Next meeting. Aussie and Kiwi are just sort of wallowing at this point. Not really sure what's going on. As I said, the numbers, we've got a bit of a strong dollar sentiment. Oil is falling finally below $80. And then you throw in the Canadian numbers, which were as expected, so no positive result there, or pretty neutral. It leads to that higher dollar CAD. So strong dollar, weaker oil, dollar CAD. I think it can only go up from here. Keep an eye on the oil price. If this keeps going, we're falling back towards $75. Well, we're going to see another 100 points on the top side of dollar CAD. And dollar Swiss still sort of going with the dollar index. Dollar yen, though, looks like it's a little bit fatigued at these current levels. Now, so what are we looking for? Well, it comes back to assessing the overall fundamental picture, right? Now, once again, if I just get up trading economics, you can actually go through and compare what the UK inflation numbers were, the consensus numbers here, okay, and the outcomes. So you can sort of see that they're much better than expected. And obviously for dollar CAD, they came out the same. Now, what are we going to be looking for today? Well, if anything, right, we're in the third week of the month. We're now getting to a point where we've had a lot of big data. We've had a lot of central bank activity. We're now sort of coming into the parts where we're going to start to see a lot of central bankers start talking, right? Now, that's not a good trading backdrop when you've got loads of Fed officials, ECB President Lagarde speaking, pundits from the Bundesbank, all over the place. Really, what you need to be looking for is we're looking for sort of tangible numbers to get involved. Well, as I said, there's not much coming out. There's a few, the weekly jobless numbers, the Philly Fed manufacturing numbers there as well today, right? The real action will kick off tomorrow, and it's really back to sterling CAD, because we've got UK retail sales, right? We saw how the US retail sales kicked in the US dollar again earlier this week. This has the potential to do the same, and then back that up with some housing pricing and retail sales figures on Friday, right? You got that sterling CAD trade back on the deck. So just be aware, we've got from here for the rest of the week, actually, we've got plenty of central bankers talking. Now that can create sort of volatile sort of markets, okay, as the market sort of tries to interpret what they're saying. Just be aware it can be a little bit loose. And today, there's not a hell of a lot, unless you're absolutely gagging for something. Check out the US numbers. Outside of that, there's really nothing to really get yourself too excited about. So from here, just check your levels, check your rates. This is all about trading when the opportunity's there. You can't go in and start chasing sterling CAD now because that trade is now over, right? So if you're looking for opportunities, I'd have a look through the just those initial numbers, and then prepare yourself for some activity on Friday, right? That's where we're at the moment. And it's, right now, the US equity futures aren't moving much, so I can't see much happening here in the Asian session. North America, in the European session, maybe a bit of activity on sterling as a residual to those numbers yesterday, but I think that's all factored in as well. We're now waiting for the penny to drop, and that's going to be Friday with those UK and Canadian retail sales figures. All right, guys, have a good one. Cheerio.